just going over this report, I see that the IMF believes that there was a tentative recovery in 2021, but the economic outlook has turned gloomy and uncertain. What a title. With the probability of a global recession. So how did the IMF analysts arrive at that conclusion? What are some of the key takeaways here?
Sure. So essentially, the global outlook has been downgraded significantly in our April forecast. Just remember, we were forecasting, we had growth last year of 6.1%, and this year we're forecasting 3.2%, and next year below 3%. And you were asking about what are the big drivers. Well, if you look at geographically, the three main engines of global growth are really faltering, both the US and Europe, but also China. And there are three important factors, I would say, behind this downgrade in growth, or this gloomy sort of headlines that you were mentioning. So first, I think foremost is the ongoing war in Ukraine, and this is continued to impacting food, commodities, and overall sentiment. The second one is the weaker than expected growth in China. You've seen the impact that zero COVID is having on global chains. There's also ongoing issues on the real estate sector, but there was clearly a weaker than expected growth, and that has influenced actual growth and trade and global value chains. And the third, last one, but certainly not least, is what you were mentioning at the beginning, this persistently high inflation, which is resulting in very much in sort of a synchronized central bank monetary policy response, where all the central banks want to take control of inflation. The rising interest rates, as they're seeing inflations that haven't seen at this level for decades. So just to give you a sense, in a matter of 3 months, since April to our July update, you've seen inflation prints that have surprised to the upside and led us to increase our forecast for inflation by 100 basis points, just in a matter of 3 months. So for example, in advanced economies, we're seeing an average inflation, which will be at around close to 7%. And in emerging markets, even higher. So we're forecasting for this year double digit, almost 10%. And obviously, these three factors that I mentioned are big drivers of that. And obviously, the risks here continue to be to the upside.
Mm-hmm. The report also mentions the Ukraine-Russia war, geopolitical tensions, China-U.S. tensions, and how, with this rising inflation, countries and their central banks have approached inflation in different ways. In China, they have a loose monetary stance compared to the more hawkish stance from the United States, the European central banks. And so I wonder how that will impact the global economy and the key headwinds there.
Yeah, so I think the big theme continues to be the central bank and the monetary policy stance. What we're seeing is a uniquely synchronized approach across all central banks. It is quite remarkable to see how both advanced economies and emerging markets are all sort of lifting rates or actually unwinding quantitative easing in sync. And here, of course, the trick is for them try to engineer a soft landing. But that soft landing seems to be a narrower path. You've seen the release of GDP data in the US, which points at 2 consecutive quarters of negative growth, and the outlook doesn't look great. If you look at markets, rate markets start to discount a little bit of not a little bit, but quite a bit of a recession. You also seen in Europe the problems that how they're struggling with high gas prices and the possible complete shutdown, which it's entered within the realm of possibilities, and the impact that this will have on growth. And that, of course, poses a major complication and headache for central banks, because in a way we are, the global economy is in a bit of the worst of both worlds. You have a situation in which growth is faltering, but at the same time inflation remains high. So the risk of a global stagflation scenario is very material. Okay, and that is the challenge. How can central banks respond to high inflation while not leading to too much of a tightening of financial conditions that brings the global economy into a recession? That is a very delicate balance, and the path for that seems to be narrower and narrower, that of a soft landing.
Certainly a very delicate situation. For the purpose of our audience, which is very crypto oriented, I wonder how this economic backdrop will impact more riskier assets.
Sure. I mean, that's an important question. You've seen what has happened since the beginning of the year. So all of these three factors, the war, the weaker than expected growth, particularly in China, and also the central bank reaction to inflation, has led to a jump in market volatility, particularly on the interest rate side. But in all asset classes, as you mentioned, there's been a sell-off in the riskier of all assets, as you've seen in equities, you've seen in high yield credit, of course, in emerging markets, and last but not least, as you were mentioning, in crypto assets. You see, over the last half year, how Bitcoin dropped, to less than the value that it had at the beginning of the year, how some hedge funds in the crypto space have been struggling. We witnessed the fallout on some of the riskiest stable coins, Terra USD. But I would say that within the crypto space, the stress that we've seen and the strains have sort of remained within the ecosystem. So even take the very stressful event or the fallout of Terra USD, you did not witness much spillover from the crypto into the real economy. So what you saw is quite a bit of a shake-up in the riskier of all of them, so in the algorithmic or in the DeFi space. But what you saw even within the stablecoin space is sort of a move from the riskier into the others that were perceived as a bit less risky, into those that are backed up by high-quality liquid assets. And that was interesting, and how the market differentiated across.
So I noticed that this is a very wide-ranging 19-page macroeconomic report the IMF has released. It has a single paragraph mentioning crypto. I'll just have it on the screen there. Crypto assets have experienced a dramatic sell-off that has led to large losses in crypto investment vehicles and caused the failure of algorithmic stablecoins. You mentioned Terra USD and crypto hedge funds. We've seen that with Babel Finance. Today we learned in a report that they reportedly lost $280 million worth of trading from customer funds. Anyway, but spillovers to the broader financial system have been limited so far. So I wonder what could cause contagion into the financial system, Antonio?
Yes, so you see, I think we have seen so far, importantly, this contained stress within the crypto ecosystem. But of course, crypto is growing, right? If you look at the use of crypto assets, it's growing to a significant share, particularly actually in emerging markets where in those countries where macro imbalances are large, where the currency is very volatile, where inflation is high, what you've seen is there is an increased adoption in those countries of crypto assets as another, perhaps a better source of payment, as a better source of cross-border payment and more stability. And this increased adoption, of course, can bring, in a situation of global risk, spillovers from the crypto into the real economy. Also, so that's one aspect, right? The large adoption in some EMs, in which they adopt some cryptocurrencies as an alternative to the domestic currency, and that is growing in some economies, and that we need to pay quite attention to that. But also the fact that we didn't see much of a spillover, for example, into the fallout on one stable coin, algorithmic stable coin, doesn't mean that in the future that will not happen. And I think that is why it's so important that we look very closely at issues such as the structure of the stable coins, the regulation of the stable coins, to make sure that they are robust, that they have robust requirement in terms of they have high liquid high-quality liquid assets, and make sure that the supervision and regulation is adequate and transparency against credit market and liquidity risk. So I think that is very important. So the fact that it hasn't happened in the past is sort of shouldn't give us comfort, and make sure that the regulation and supervision of these instruments is adequately in place.
Well, certainly, if cryptocurrencies get adopted, further mass adoption throughout the world, it could potentially have more of an effect on the broader financial system. We see that the IMF has frowned on El Salvador's adoption of Bitcoin as legal tender, and you've told us previously that you can't really comment on El Salvador per se, but maybe you can offer your take on BTC adoption by governments as legal tender in general. We see that CAR, this Central African Republic, is also adopting Bitcoin. Is it a good or bad idea for governments, and what is that longer term impact?
So I think we should distinguish between two aspects, right? The de facto adoption and sort of the jure, the more legal tender. I mean, on the de facto adoption, crypto brings some positive aspects, right? It can help financial inclusion, it can help with cross-border payments, and I think the technology, we should take advantage of it. That's one element. The problem comes in cases where there's fundamental macroeconomic imbalances. Countries actually have to resort to this crypto as a substitute for the national currency, where there is less trust because there's high inflation or high volatility, and they take the leap into the legal adoption. And that is problematic. That is problematic because then you have issues related to macro stability, you have issues related to financial stability and to integrity. And that is where it becomes a problem. Macro stability, because you're legally adopting something that is highly volatile. So domestic price stability, which is what you want to have, you will not get with that, right? And neither on import prices if it's in a highly volatile crypto asset. Then you have issues related to financial stability. You can imagine this high volatility, how this will filter through the banking system, and assets denominated in crypto will lead to large variation in those financial institutions. And then there's issues of financial integrity as well, related to AML and CFT that need to be looked into. So that we think is problematic, and therefore we're not very supportive of.
Antonio, finally, before we wrap, just wanted to know your thoughts on stablecoins. Would a CBDC be more acceptable in the IMF's perspective?
So I think, stablecoins obviously can provide very useful services, but the issue here is that they should be subject to very robust requirements and transparency, particularly on the reserve assets. They should be of high quality, they should be liquid, and they should be, make sure that the credit market operational risks are in place. And so when you go about regulating stable coins, I think if the stable coins look more like money market funds, then securities regulators should take action there. If they're more like useful payments, then the payments authority should be in place. And that's, of course, comes the issue of the CBDC that many countries are now contemplating, and they're making big progress. And here, the important issue, one of the important issues, this is a broad topic that we could discuss for a long time, but a key issue would be how to make sure that there's a proper payment system, the interoperability of the systems of the different CBDCs, and how they're put in place so that, depending on which one have access to it, there's no sort of in that ecosystem, the public side can operate well with the banking system and the private CBDC. So I think these are the issues that we're currently wrestling with. And importantly, in all of that, as the CBDCs become mainstream, that they can be integrated and they should be interoperable across jurisdictions. Those are important features that they should have.